Hi, I'm Bill Blain, strategist with Shard Capital in London. Of course, today, like everyone else, I'm working from home. But I thought it'd be useful, after yet another week of extraordinary gains on global stock markets, to talk about where the global economy is likely to go. Now, everybody knows that the impact of the C-19 virus is going to be very serious in terms of lost jobs, businesses in trouble, and the likelihood of a massive slowdown through the first half of this year. We still have people who think we're going to have a very quick snapback in the global economy, the so-called V-shaped recovery. I'm afraid it just isn't going to happen. The effects of all the policy that has been thrown at solving this are not going to be able to change the fundamental underlying changes that occur to the global economy. But what we will see, though, is a gradual recovery, but very much a change in the whole way that the global economy operates. We're going to see change in supply chains. We're also going to see a refocusing in on the way that people manufacture and sell goods. It's going to be one of the most fundamental changes to the global economy ever. But how is it going to occur? Well, we've got a whole series of changes that are coming up. The first is these are the macro issues at national levels. We saw earlier this week that China has seen first quarter GDP decline by some 6%. Yet that is a pretty shocking move, and it's the worst decline since the 1970s. But what does it mean? Well, we're all pretty sure that China will recover quickly because that's the way that their economy can work. The real question for China is who is going to be there to buy the goods that they are going to be able to produce. In other countries, the picture is still more difficult to predict. Certainly, we know that economies like the US, where Trump is desperate to reopen the economy, will show their usual resilience and recover strongly, but we still don't know how much damage the virus has actually done to the underlying economy. We have some serious policy issues to consider here in Europe. Whereas the Germans have been able to quickly pay everyone's salaries through an existing salary pay scheme, and the Swiss seem to be able to make business loans within a day based on 6 very simple questions. Here in the UK, the pace of extending the promised loans to business has been incredibly slow, snail-paced. I've heard stories about struggling business owners being offered appointments in the middle of May to discuss urgent lending requirements. That simply is not going to help the economy. In the US, they've burned through a $300 billion SME bailout package in just a few days. But what is going to happen at the macro level as we see recovery? Well, it will happen, but there are going to be, as I said, massive changes, and these will be in terms of supply chains, and I'm afraid an element of protectionism. You are going to see countries focusing on making sure that they will be able to withstand this kind of thing if it happens again. So that means bringing manufacturing back on shore and focusing more on the resources of how a country can serve itself. That does not have good news for global growth, and it is going to be an issue. But it's when we dig down into individual sectors and individual companies that we really begin to see the effect of C-19. Now, we know that the big losers are going to be global tourism and especially the aviation industry. We have seen Boeing lose some 300 orders, but let's put that in context, for its Boeing 737 MAX. By putting it in context, I mean they have 5,000 of these aircraft on order. The big question is Boeing will it continue to struggle to solve the software problems, or might it just decide that the outlook for global aviation is so poor that it's not worth doing and cancel the whole program? It is still a possibility. But here in Europe, we have other issues. If you take a look at Rolls-Royce, the manufacturer of choice for aviation engines, Well, they have enormous multiplier effects on the economy. Hundreds of small UK SMEs focusing on precision engineering supply Rolls-Royce. If Rolls-Royce isn't getting orders from Airbus and Boeing to build new engines for aircraft that aren't being ordered or delivered, then all these small SMEs struggle. It's a massive multiplier effect. And that is happening throughout the whole economy and throughout the whole aerospace sector. We don't even need to talk about how damaging it is already on areas like hospitality and tourism. It's clear they're going to struggle. But at the same time, sectors like that are struggling. We're seeing others getting significant boosts. Some of these will be short term, like in healthcare. I suspect, unfortunately, that we won't remember for long just how critical healthcare and the work of nurses and doctors has been to keep us all alive. I think very quickly we'll see their position and their rights to better salaries pushed to the back of the queue. That, unfortunately, is the way things operate. But we are also seeing other sectors, such as tech, where we've seen the biggest stock market gains. That's because areas like cloud for Microsoft are seeing incredible demand from users. And Apple have been very smart to announce that they are relaunching a mid to cheap priced iPhone because they know people will continue to use phones. It's simple. That is a business that isn't destroyed, but simply delayed by the coronavirus. And that's going to be true across the whole economy. Even the areas like airlines, which are currently struggling, and some people think it may be 10 years before we see it recover to the levels of 2019. The problems that airlines face are going to throw up enormous opportunities to find new ways of doing what airlines do better. And already I've seen a number of new proposals for even lower cost airlines to take over where the big airlines are struggling. It's going to be absolutely fascinating to find out and watch how it all occurs. But how can we talk about global recovery when still we have Western economies in lockdown? And this is where it begins to get really interesting in terms of when is the right moment to reopen? Well, we simply don't know because of the lack of testing, especially here in the UK. But we are beginning to get some very interesting stuff now from the economic modelers. And one company I talked to, Neuron Capital, well, they've done some very interesting agent-based research and scenario analysis. And they've come to the conclusion that if we do open too early, and that would mean early May, then we're very likely to see infection rates rise again, peak quickly, and cause a second crisis. However, if we simply wait a few more weeks into late May, then we're going to see the rates continue to fall. And in fact, they predict that if we wait too long to undo the lockdown, then we'll start to see a real diminishing in the effects, and it will be negative for the economy. Based on their research, it looks like mid to late May is the right time to ease lockdown restrictions. But what do we mean by easing lockdown? It's pretty clear that until we get a proper virus, and that could be years away, that we are going to maintain some forms of social distancing or hope for massive improvements in the medical treatment of the disease. And that could include things like genetic testing, because it's now apparent that there is a large genetic element to the different ways that some people suffer from the disease. But lockdown could be eased in a way that we get businesses reopening. Sadly, we're unlikely to get to the stage where global transport and travel can reopen the way it used to. It's going to be fascinating in the next couple of months to see how this goes. But even though the global economy is going to take a massive deflationary shock in the next few months, I'm increasingly of the view that over the next few years, we're going to see things change dramatically. It doesn't mean we're out of the woods, though. Even as we see markets reopen, we're going to see a re-emergence of tensions. And there's two areas that I'd point to in particular. First of all, geopolitics. A lot of people are saying that this plays into the hands of China and that they will now be able to step into markets that Europe and the US are unable to fill. If you think that's going to be the result, you've missed the trend. It's been going on for years. It's more likely that we're going to see now the end stage of China challenging the US for global economic supremacy, and that raises its own kinds of tensions. And the second area is the sheer amount of money that we've seen pumped in to bail out the economy. If that money does the same thing it did after 2008 and finds its way through rising stock market prices to the very richest in society, and the poor are expected to suffer cuts and further austerity, then that is going to promote yet another wave of populism. And that's where it begins to get really dangerous. We need to find a way of making sure that this recovery is broad-based. Thanks very much, Bill Blain, Shard Capital.